Market Cafe on ET Now with me, Shreyanshi Singh and Priyanka Uppal. On the next 1 hour, we'll get you news and updates from within the country as well as across the globe, tell you which stocks you should be keeping on your radar and tell you what the brokerages are saying as well. But for the first things first, we've got to take a look at the US markets, Priyanka.
Absolutely. Morning, Shreyanshi. Shreyanshi, just a few minutes back only that the news that have come in, the Trump has called in for 25% of tariff on products which are coming in from US from Mexico, Canada. So that means pro-policy, the kind of expectation market participants have set in from Trump, that is coming into play now. In fact, he's also imposed 10% on Chinese products also. But now, let's talk about US markets. They seem to be on record levels again. In fact, post-Trump election rally, there's an extended rally what we are seeing now. Now, 30 stock Dow, that one popped roughly 440 points yesterday, nearly 1%. And now to close on a new record close during the regular trading. In fact, S&P also, that one gained minor, but then that one also notched a new all-time intraday high, whereas Nasdaq also jumped up about 0.3%. And not just the main indices. In fact, if you look at the small cap index, Russell 2000, that one also hit a new intraday high yesterday. Its first record since 2021 now. So, US market is on record highs. There's no stopping to the run-up, which has come in not just before Trump. In fact, after the Trump election, that extension of the rally is again what we're seeing on in US markets. Now, talking about treasury yields, that one fell slightly because the investors lauded the choice of Key Square Group founder Scott Bessent to lead the Treasury Department. Now, this is a truncated week in US. Market is short on Thursday as well as half day on Friday on Thanksgiving. So, two economic data which is on the tap is October personal the important data which is to come in personal consumption expenditure price index that is on tap for this week.
Well, absolutely. Lots to watch out for this week, right, Priyanka? But then when you take a look at oil prices, though, let's also take a quick look at what really happened with oil and gold, rather. When you take a look at oil prices first, fell more than 2% after multiple reports that Israel and Lebanon had agreed to the terms of a deal to end the Israel-Hezbollah conflict, citing unnamed senior US officials as well. Firstly, let's take a look at Brent crude futures because you're looking at a close of a downtick of just about 2.9% coming in there for Brent futures. $73 a barrel is the level that you're looking at there. And when you take a look at US WTI as well, a downtick rather of 3.2% or $2.3 is what you're looking at there as well. So those are the kind of levels that you're looking at largely for WTI as well. $68 per barrel is where that one was at. But Israel did say that it is moving toward a ceasefire in the war with Hezbollah, but there are still issues to address. While you do have Lebanese officials also voicing guarded optimism and also saying that Israeli Prime Minister Benjamin Netanyahu was not to be trusted. So that is the latest update as far as oil prices are concerned. You have all of those factors also playing in for gold as well, and you do have gold prices plunging just about 3%, breaking a 5-session rally to its highest in nearly 3 weeks as reports of Israel nearing a ceasefire with Hezbollah, the ones that I mentioned, coupled with Trump's nomination of Scott Bessent that Priyanka did mention as the US Treasury Secretary, also started the precious metals safe haven appeal. So that's what you're looking at in terms of price levels. Then spot gold fell just about 3.4%. $2,600 per ounce is the kind of level that you're looking at when it comes to the yellow metal, and this is the biggest daily percentage decline since November 6. Now, in terms of key catalysts, you do have geopolitical tensions just sort of easing off just a little bit, and gold, of course, is a safe haven asset that is bought in times of political uncertainty. So you do have that safe haven trade also playing in, and you have that US Treasury pick update also is something that the market is looking at least when it comes to gold, Priyanka.
All right. Well, talking about another asset class which seems to be a off-risk rally at the moment, that is Bitcoin, which has been the favorite for traders for at least last 2-3 weeks now, which is up 40% since November 5th. But then that dream run to the key milestone for $1 lakh, that seems to taken a halt, and now it is trading in a stubborn range. Traders seem to be in a profit booking mode. Remember, it has ever since the US elections US elections were underway, Bitcoin started to surge, and we've seen more than 40% rise in November month itself. Now, but then now seems that traders are in a profit booking mode here.
Well, absolutely. Let's also take a quick look at the events that you should be watching out for. And back home, of course, you do have MSCI index rejig that will be kicking into effect. So that is important to watch out for. And from the US, there's FOMC minutes that we've been telling you about. Along with that, there's new home sales data and conference board consumer confidence data as well. So those data sets are going to be in focus along with everything that we've mentioned thus far in terms of events that you should be keeping on your radar. And in terms of the second quarter earnings, there's Siemens that is reporting numbers. In terms of corporate action, you have Escorts Kubota that will be commencing NBFC operations. So that's the one to watch out for, along with UPL, because it's the record date for UPL rights issue, and Canfin Homes board will also be mulling dividends. So that counter will also remain in focus, along with a host of counters that are going to be important on account of it being the last day to buy shares to be eligible for dividend. The ones that I'm talking about on your screens are Happiest Minds, Ipca Labs, as well as Natco Pharma. So those are the counters to be watching out for on account of that dividend eligibility as well.
All right, but then important would be to track the MSCI rejig, the kind of flows we're expecting in the 5 new counters that will be added, and weightage is also being increased for many of the large caps like HDFC Bank. But moving on, let's get you some global stories, starting with US itself. I'm talking about the tariffs now. The big headline that we're tracking this morning is the US President-elect Donald Trump plans to raise tariffs by an additional 10% on all Chinese goods being imported into US. In a social media post, Trump said his first of many executive orders on January 20 would impose tariffs of 25% on all products coming in from Mexico as well as Canada. Remember, he is set to take over as the next US president on January 20th.
Alright, then moving on. Meanwhile, Minneapolis Fed President Neil Kashkari, typically on the hawkish end of the central bank's policy spectrum, said he's open to cutting interest rates again next month, calling it a reasonable consideration to cut rates by 25 basis points in the December meeting as well. Additionally, also says that he's trying to understand how much downward pressure borrowing costs are having on the economy and where inflation is headed then. Important to note here that key report on the inflation gauge is expected later tomorrow, coupled with the latest monthly job market reading as well.
Okay, shifting focus to neighboring country Singapore, where the headline inflation rate fell to 1.4% in October month. Now, this is down from September's figure of 2%, as the cost of cars dropped and price gains of rental properties eased out. Now, the inflation print came in on the back of declining cost of cars. It marked the first time that the headline inflation in the region fell below 2% ever since March 2021, when it came in at a mark of 1.3%. Now, the core inflation, which excludes accommodation as well as the private transport, came in at 2.1%. This is down from 2.8% in last month of September, and lower than estimates of 2.5%.
Alright, meanwhile, China keeps its medium-term lending rate steady as the country seeks to stabilize the yuan post-Trump's victory in the US. Now, the People's Bank of China kept the medium-term lending facility rate unchanged at 2% on 900 billion yuan worth of one-year loans to some financial institutions.
Alright, regulatory woes mount for the iPhone maker after CCI dismissed the company's request to halt the review of an investigation alleging the company's violation of competition laws. Initiated back in 2021, the probe reportedly accuses Apple of misusing its dominant position in the iOS App Store, affecting app developers, users, and even the payment processors. Now, the company has denied the allegations, claiming it holds a small market share in India, while Google's Android system, that one dominates 96.5% of the total addressable market.
Other than back home, S&P Global Ratings has gone ahead and retained its forecast for India's GDP growth in the current fiscal at 6.8%. However, the firm has also lowered the projection for the next 2 years. S&P has cut the financial year 26 forecast to 6.7%, while when you look at the forecast for financial year 27, that has also been trimmed to 6.8% versus 7% earlier, and the rating agency also expects growth to ease in the current fiscal on the back of lofty interest rates, along with reduced fiscal support and dampening urban demand. So that is something that you're looking at as far as S&P Global's forecast for India's GDP growth is concerned.
All right. Okay. With this, we stay for a Short break here. More to come on the other side of the break. We get a cue from the Asian market as well as key buzzers for the day.
Powered by Tata Sampann. इसमें
Welcome back. Thank you so much for staying tuned in. Well, before we move on with the rest of the updates that we have for you, let's also get you a quick check going on FIIs and DIIs and what they really did. Because FIIs did turn net buyers after 38 straight sessions of selling. Now, they bought shares worth 9.9 thousand crores yesterday. And a reversal was also seen when it comes to the DIIs as well, because they turned net sellers. Shares worth 6.9 thousand crores is really what you're looking at when it comes there as well. So that's the important update that we have for you. FIS turning net buyers after 38 straight sessions. So Priyanka, it does look like the Santa rally is really around the corner.
Let's see. Let's aim for that. And then, in fact, there's one more positive news for the entire group. That's Adani Group, because GQG Partners now reacts to the US SEC Adani's summons, saying it will not have any material impact on the group's businesses. Anurag Joshi is joining it with more details on that. Anurag.
GQG has released a client memo in which the US fund has said that it believes that the level of exposure that it has in the Adani Group companies is manageable. And this is even given the volatility we have seen after the US Department of Justice indictment of Adani executives. Also, on GQG has said that on November 21, its exposure in the Adani Group companies was $8.1 billion. That is out of the total assets of 156.7 billion. So that's roughly 5.2% of the total assets that GQG manages. The investments in Adani as of November 21 had a positive return, and they don't see these actions as having a material impact on the Adani businesses. So, and except for Adani Green, GQG says that the other Adani companies do not need to raise more capital at this point, and GQG says that it will remain diligent in re-underwriting our positions and examining the new facts. And it says that there is no direct connection between the Hindenburg allegations that came a few months back and the recent SEC indictment allegations.
All right, thanks Anurag for getting us that update then. But moving on, with the government at the centre consolidating its power, will there be a renewed push then for infrastructure projects? And could this really ensure a sustained rally when it comes to the PSU pack? Remember, they're all down anywhere between 10 to 30% from their 52-week highs. But are they now ripe for a rally? Sharad is joining in with the factors that you need to be watching out for.
Well, yes, PSUs are back in focus, and of course there are certain reasons why they are actually in focus, and they have been buzzing over the last two trading sessions as well. Now, the government's order backlog, that's expected to be cleared as per analysts, and interestingly, there has been a big win for NDA-led government in the state of Maharashtra as well. Now, this parliament session has also started, especially announcements have started pouring in, especially on shipping and exports. That is something which the market is actually looking forward to. And also, interestingly, a week ago, DIPAM tweaked the capital norms for value creation. Now, this is for various actions such as buyback, share split, dividend, bonus as well. If you look at the PSU stocks as well, they have corrected. Now, there has been a significant correction. You could say roughly, you could say 13% from 2024 highs as well. But now let's look at what the brokerages have stated. Kotak Securities, they have stated that the government's focus would be on execution instead of stimulus announcements. And Macquarie also has stated that the capex must rise almost by 52% in the second half of FY25 as well. Also, there are certain risks also, and there are three major risks. The first one is being the execution. Any delay in that might be actually impacting the budget as well. Also, the inflation and the rising geopolitical tensions across the board, be it US's tariff announcements or issues in the Middle East, all impacting the PSUs as well, especially on the global supply chain front. Now, apart from this, now let's look at how the correction has actually panned out over the last 3 months. The names over here, we have Cochin Shipyard, MMTC, MRPL, IRCON making it to the list where the losses have been more than 25%. Also, to this list, if you look at it, we have Bharat Dynamics, Midhani and Hutco, RVNL as well. Apart from this correction, We have taken an analysis of at least 10 analysts tracking the stock of the BSE PSU index, and the stocks with the highest 12-month target price or potential this looks is REC, LIC, Coal India, ONGC and Union Bank as well. Also making it to the list, there are stocks such as HAL, Canara Bank, Bank of Baroda, Oil India and even PFC coming, where there is a strong potential over the next 12 months as per the analysts.
Sure, thanks so much for breaking it down. In fact, the upside potential seems to be good for many stocks in the range of 25 to 35%. Thanks very much. Moving on now, big relief coming in for Vodafone Idea as the cabinet clears bank guarantee waiver for telecom companies. Now remember, Vodafone Idea was supposed to submit bank guarantees worth over 24,500 crore. Prakash Priyadarshi joins in with more details on this.
A very significant development coming in, as we are learning from our sources that the cabinet has decided to provide relief to the telecom companies from providing bank guarantee for buying a spectrum up to 2022. A very significant development coming in and a long pending demand of the industry. As you are aware that the 2021 telecom reforms have eliminated the bank guarantee requirement starting with the 2022 auctions, and therefore Department of Telecom had favored waiving bank guarantees telecom companies vote for buying a spectrum. A very important development in the context of Vodafone Idea, as Vodafone Idea is going to be biggest beneficiary of this development, where it is required to submit a total of about rupees 24,700 crore in bank guarantees. Along with that, there's the moratorium for spectrum auction dues is also ending in October 2025. A very significant development for the telecom sector, and the government has decided to waive off the bank guarantee requirement. However, formal announcement has not been made, but the sources are confirming that the government has decided to waive off bank guarantee requirement.
All right, thanks Prakash for getting us all of those important details. In fact, tell you what, let's also keep it going with stock-specific action. Then HUL's board has given an in-principle nod to the demerger of its ice cream business into a separate entity, which will eventually be listed independently as well. Now, the company said the decision to demerge will be placed before the board early next year. In fact, we do have Snehi who's standing by with all of those important details. Snehi?
Well, yes, HUL is in focus because the board has accorded an in-principle approval to demerge their ice cream business, and this will be turned into an independently listed entity. HUL has decided to demerge after considering different modes of separation for the ice cream business. When we interacted with the management during Q2 numbers, they also said that they were mulling different options like a stake sale or an entire demerger, and they've decided to go down the entire demerger route. Now, the rationale, they say, is to maximize value for all the shareholders of the company, and it is proposed that the shareholders of HUL will receive shares in this newly listed ice cream entity in the proportion of their shareholding in HUL. The decision to demerge is subject to approval of the board and the shareholders, and this decision to demerge will also be placed in front of the board anytime early next year. So that's the rough timeline that we have on this demerger right now. Let's understand the contribution of the ice cream business to the overall HUL business, and analysts say that ice cream contributes roughly 3% to HUL's overall annual top line. So the ice cream business revenue roughly translates to 1,800 crores annually, and analysts don't expect to see much impact on HUL, and HUL will be able to focus on core businesses is what analysts believe, the likes of their home care, beauty and well-being and personal care business. And lastly, just to run you through what Q2 looked like for the ice cream business, in Q2 ice cream volumes have remained flat on a year-on-year basis. So that's the update that we are getting from HUL. That's the big update, and HUL will be in focus on the back of this ice cream demerger that they're planning to do.
So key highlights she spoke about was that it will not make much of impact on the financials of HUL, but then demerger, which was underway from a long time, has come onto the surface with this announcement now. Thanks very much, Snehi. Now moving on, the Finance Ministry released its November economic review, highlighting that high frequency indicators have rebounded, and more importantly, food prices may be moderating now. Prakash joins in with more highlights on this.
The Finance Ministry has come out with the monthly economic review report for the month of October, where it says despite multiple global challenges, high-frequency indicators of Indian economy have shown positive trend during month. Along with that, These include indicators of rural and urban demand supply scenario. When it comes to employment prospect in the country, the report has mentioned that the formal workforce is expanding with notable increase in manufacturing jobs. When it comes to export growth, the report has noted that India's export recovery may hamper due to softening demand in developed market, and therefore dynamics of global interest rates, earning growth, and geopolitical developments along with policy decision of the next administration in the United States of America will determine the course of trade and capital flows. Along with that, the recent developments in Russia and Ukraine have put more pressure on the financial market. However, India's economic outlook for the coming months is cautiously optimistic. Agricultural activities are likely to benefit from favorable monsoon conditions, increased MSP, and sufficient supply of inputs, and that shows a bright prospect for agricultural production going forward. However, early November trends are showing moderation in key food prices, but geopolitical factors may continue to impact domestic inflation and supply chain scenario going forward.
Alright, then those were some of the key highlights, at least when it comes to the November's economic review. But time for a very quick breather on the show. When we come back, we have lots more news and updates for you, so don't go anywhere.
Welcome back. You're watching Market Cafe on ET Now. Now let's get you some more news. The microfinance industry's self-regulatory body, MFIN, that has introduced a new announcement that it is tightening loan underwriting guidelines for its members. Now, Varun is here to tell us more on the changes that have been proposed by the body. Varun, morning.
Good morning. So, well, looking at the things that are currently happening in microfinance industries, the Microfinance Industry Network, which is a self-regulatory organization for micro lenders, they have proposed some tighter norms for underwriting of loans. Now, the norms which have been proposed, amongst them, the first is the number of loans which a new customer can take. So, here, earlier the rules were that a loan customer can take around 4 loans from a microfinance institution. Now, that has been reduced to 3. So, now a loan customer can only take 3 loans from a microfinance institution. Also, the limit of borrowing has been now fixed to around 2 lakh. Now, this 2 lakh includes both microfinance loan and also the unsecured retail loans. Also, the existing industry norms state that microfinance institution cannot lend to a customer who has become an NPA and who has taken a loan of around 3,000 and the overdue is for 90 days. Now, the number of days has been reduced from 90 days to 60 days. That means a borrower whose repayment are overdue for over 60 days, they cannot be extended fresh loans. Also, the KYC norms have been tightened and the frequency of sharing borrowers' information with the bureau has been enhanced. So, these are some of the steps that have been proposed by the microfinance industry network, and on this Jeffrey says that this can create short-term liquidity issues in the overall MFI space, but yes, this would be very good for the long term.
Right, then thanks Varun for getting us those highlights. But moving on, then time to get to the futures and options roundup. In fact, Ansh is standing by with just that. Ansh?
Yes, so let's start with cash market because FIs are back in market, maybe because of this MSCI flows. But if we talk about index future, then here also we are seeing that they have been becoming bullish here because they have added around 21,300 long contract. They have covered short by more than 24,000 contracts. So net to net basis, we are seeing addition of more than 45,000 contract on upside. Also, if we talk about net position, then on 21st November, the net position was a minus 2 lakh contract, and within 2 sessions, it has come down to around a 1 lakh contract. So we are seeing very good short covering happening and long addition in index future. Now, if we talk about Nifty, then index has been advancing for second consecutive session. It has touched 2-week high level. Also, it is back in that previous range of 24,500 to 23,800, indicating a neutral bias. To get on a positive side, to get very bullish in the market, we need to cross that 24,500 mark decisively. Also, in index future, we are seeing good short covering happening. Open interest has gone down by around 6%, and on the option front, we are seeing put writing happening at that 24,200 strike, indicating good support base around this level. Now, if you talk about Nifty Bank, then we are seeing good positivity because Nifty Bank has been respecting that 200 DMA. It has been rising up and it has closed above that psychological mark of 52,000 mark as well. Very importantly, in index future, we are seeing very strong short covering happening because the open interest has dropped by almost 30% here.
All right, so their long future expands to a further, now it's more than 36%, and after 37 sessions, they've turned net buyers. Thanks very much, Ansh. Looks like a promising, looks like a good positive news for the market, of course. Now, moving on, Ria is joining in to tell us the stocks that could be buzzing in trade on the back of some news. Ria, morning.
Yes, good morning. So let's take a look at the stocks that are going to be in focus today. First up is Zomato. Now they have approved the opening of their rupees 8,500 crore QIP at a floor price of rupees 256.91 per share, which is a 2.8% discount to yesterday's closing price of rupees 273.6. We also have KEI Industries, which has launched its QIP. They plan to raise rupees 2,000 crores via this issue at a floor price of rupees 3,880.54. Now the indicative issue price of rupees 3,800 is a 5.5% discount to the current market price, and the equity dilution for this issue is seen at 5.8%, and the funds that are going to be raised will be used for capex at the Sanand facility and for debt repayment as well. We also have three companies in focus today on the back of major order wins coming in. The first one is Ashoka Buildcon. They've received a letter of award from the NHAI for a project worth rupees 1,391 crores. We also have BHEL and Hitachi Energy in focus. Now the consortium of these two companies has received the notification of award from Power Grid Corporation to design and execute the 800 kilovolt 6,000 megawatt bipole and bidirectional HVDC link in Gujarat under phase 5. And we also have Power Grid in focus since they have emerged as the successful bidder for the transmission system project for evacuation of power from the Rajasthan REZ phase 4. Lastly, also keep an eye out on Dev Information Technology, since this company has won a contract from the Bhavnagar Municipal Corporation worth rupees 84.5 lakhs, and this contract is for the annual maintenance and development of the online property tax system for the corporation. And further, the board has also approved a share split from the face value of rupees 5 to rupees 2. So keep an eye out on all of these stocks today.
Well, absolutely, Ria. We'll keep an eye on all of those counters, but there's also the defense pack and certain counters from that pack as well, because you do have JP Morgan that's initiated coverage on select defense plays, citing an overweight stance on BEL as well as HAL, and they also have a neutral stance for Moscow Dock. So tell us a little more about the key takeaways of that brokerage note as well.
Well, absolutely. So JP Morgan has come out with a note on the defense pack. For BEL, they've initiated coverage with an overweight rating and a target price of rupees 340. For HAL, they've initiated an overweight rating with a target price of rupees 5,135. And for Masdok, they have a neutral rating with a target price of rupees 4,448. Now, they say that there is a long runway of structural growth for these companies going ahead, and the recent stock price correction that we've seen is an opportunity to buy these stocks. Now, remember, the entire defense pack had fallen in the range of 11% to 56% from their 52-week highs. But if you take a look at the three companies that JP Morgan has focused on, BEL has fallen around 14%, HAL has seen a fall of around 25%, and Masgon Dock has seen a decline of around 29% from its 52-week highs. Now, going forward, JP Morgan has also said that there is going to be a strong growth in the defense production and exports going ahead, and they've also said for exposure to structural growth, BEL remains the preferred pick for them. So keep an eye out on all of these stocks on the back of this note coming in from JP Morgan.
All right, so JP Morgan note on defense, especially HAL and BEL. BEL was a top gainer on the Nifty yesterday, and we've seen earlier Sharad also talking about the analyst recommendation and view on many of the PSU stocks, which includes stocks like HAL, where there's a potential of more than 25%. Thanks very much, Ria, for all that details on this particular segment of the news. Moving on, we have Gaurav joining in to talk us about the brokerage notes, the recent notes on the stocks that have come in. Gaurav?
Well, yes. Let's begin our list today with Swiggy, because this is going to be in focus, and the reason being that UBS has initiated with buy rating and a target price of 515 rupees on this stock, which gives a healthy upside of more than 30%. What they're saying is that there is plenty of room to grow. And when we talk about the when we talk about the valuation, Swiggy is currently valued at 35% discount to Zomato with headroom to grow, and that is the reason why they are being bullish on Swiggy. What they're saying is that in terms of online food delivery, we are already seeing that they're catching up to Zomato's margins and scale, and at the same time for quick commerce they need to scale up a little, but at the same time they are being bullish on Swiggy. Other than that, RIL is also going to be in focus because Jeffries has now maintained buy rating and a target price of 1700 rupees. What they're saying is that after the recent correction, it is a compelling risk reward ratio for the company. They're expecting Jio's strong network which is likely to grow and will also support the 5G network for the brand, and at the same time they also see some likelihood of Jio listing in CY25. At the same time, when we talk about retail, they are seeing some strong recovery in October, but they also believe that in the next 2 quarters we may see this recovery sustaining, and at the same time they also believe that the current valuation of the retail segment is currently at an attractive level. Lastly, let's also focus on some ER&D players because JP Morgan has now given some outperform rating on companies like KPIT Tech, Cyient, L&T Tech, Persistent, and the reason being that what they're saying is that when we look at growth and valuation, now they are actually not at a premium where we have seen earlier. What they say is that the valuation premium may not go to the peak level that we have seen earlier, but at the same time there is some headroom to grow for in terms of valuation. They continue to like stories like KPIT Tech and Persistent in terms of heroes, and at the same time they also like recovery plays like L&T Tech and Cyient. When it comes to pecking order, what they are saying is that the preference would be KPIT Tech followed by Persistent, then L&T Tech, Cyient, and lastly comes to Tata Tech, where they have underweight rating and a target price of 800 rupees. So definitely watching out on all these companies on the back of the brokerage note that we have received in the morning.
Alright, and those are the counters that make it to brokerage radar bright and early this morning. But with that, completely out of time on this edition of Market Cafe on ET Now, from me, Shreyanshi Singh, Priyanka Uppal, as well as the entire team that put this show together. Thank you so much for tuning in. But you don't go anywhere because the market takes all of the action forward.
There's no particular time to rise.